Hello everyone, welcome to my channel. It's Queen Michaels. Today in this video I want to share with you or show you a strategy that really improved my trading. First and foremost, if you're new to this channel, I recommend that you subscribe and also smash on that notification bell on this channel so you'll be getting all the informations whenever I post content such as this. Alright guys, this is a very simple strategy here, and it's a corrective pattern here. You guys will see the very unique corrective pattern, and one of the challenges of most traders is how to effectively trade this breakout. So this video is labeled trading the breakout after a corrective pattern. Okay, now different time frames would also aid in your trading. Okay, different time frames would also aid in your trading, and if you switch to different time frames or higher premises, you are going to see something that would improve your trading or find support inside of those key environments. Okay, so what do I mean now? For example, let's say you are here on a 1 hourly time frame, and the 1 hourly time frame, as you can see, and you have set up like this. Okay, on 1 hourly time frame, beautiful setup, nice setup here that you can label as easy as possible. Okay, you can label this as easy as possible, and you know that this is a corrective pattern. If you put this up here and you put this up here, all right, you can see that we have a three-step movement here. Okay, we have a three-step movement here, and we can label this as a very simple corrective pattern of the ABC. Okay, we can label this as the ABC, the very simple corrective pattern, which you can label easily. All right, so I'm just going to do this very fast and try as much as possible to keep this simple for everyone that are new to the Elliott wave concept. So this is a very simple ABC pattern, and this is the end of the formation. Okay, this is the end of the formation. Let me restrict this to the 4 hourlies alone. Okay, so let me restrict this to the 4 hourlies. I don't want to see this on the daily. Okay, I want to see it on the daily. I don't want to see it on the weekly. I want to see it on the weekly, because in the weekly it's going to be too noisy. Okay, I don't want to see this on the weekly, so let me just restrict this to these time frames alone. All right, so we have a simple corrective pattern here, and let's say this is the end of your trading day. Okay, this is the end of your trading day, and you discovered this pattern, or you spotted out this pattern on the end of the trading day. And I know some traders want to see this kind of formation move up to 127 extension. Okay, I don't have the 127 extension here, but I can just quickly add it. For those of you that do not know how to add extensions or add to your Fibonacci, this is a very easy way to learn as well. So 127 extension, I'm going to put up 1.271. This is 127.1. So this is the level here, and this is the description here. So I'm going to put this as the extension. Okay, then I'm going to press the OK. So this is going to come in here as my extension. Okay, so some traders want to see the extension up to this level here, but sometimes price gets to this point, sometimes it doesn't get to that point. Okay, so what you want to look out for is a reversal pattern. Okay, reversal pattern. Once this reversal pattern comes, okay, don't doubt the market. The very first challenge, or the very first area where traders find difficulty or make mistakes is when they start doubting formations. It's a very simple setup here that price did create this sort of formation, dropped one more time down, and then created some sort of contractive pattern here. So you don't want to argue with the market. Definitely the market is making an accumulation, okay, at this point in time, or it's making a setup to start up a new phase of market after this corrective pattern here. It's a very unique corrective pattern. So you have the price makes another push to the upside. This is another challenge of traders. Traders makes this kind of mistakes. Okay, they do not know what area they should start looking for buying opportunities. Now I'm going to give you two scenarios in this example here. Either you're going to be using the Fibonacci tool, and you guys know that I'm a great fan of the Fibonacci tool. I want to look at the Fibonacci tool. What Fibonacci areas could I be looking at taking the next buy? First of all, I as a trader could be tempted maybe to use the 38.2 at this point. Okay, 38.2, and let's say you put up a pending buy order here, and price comes in and triggers you, and then you're upside. Okay, you remember guys, you have a supply area here. Okay, this video is for everyone that wants to learn. So if you want to learn, you stay till the end. If you don't want to learn, you can then move on to next video, whatever video you want to be watching. Okay, so here, this is your supply. This is not your supply. Okay, most times traders have issues of maybe you have a market going down like this, and then on the reversal they will start looking at this as resistance area. No, this is not a resistance area. This is going to be your resistance area. This is the point where buyers found supply, so that area is going to be respected one more time. Okay, before you are marking, or let's assume that you decide to choose this area as your supply, let's assume that we had some sort of detail, previous detail around that point. Okay, previous details around that point. What I'm saying is that let's assume we had a structure or price or market respecting that zone. Then and only then can you pick up that zone as a supply area, because price can bounce off that zone. It's a key environment. Okay, it's a key environment, and another thing that it is historical. So we have price dropping here, support, resistance, breaking through back here, and also support. So you can expect that price could react around that historical level here from the past. Okay, but if not that, you can expect that if price is falling in this way, that the retest, most oftentimes we have a small detail here. This area is the supply. Okay, so either price would go through that area or would come close to that area and react just a little bit above that area and then continue downside. Okay, so this is a similar one here. Okay, so we have price coming into possible supply areas such as this. For my kind of person, or in the way I take trades, if this is the profitable trade and I space through such like this, I'm going to put my trust stop somewhere around here. Okay, if price comes back down fully, I'm going to be out of the market, and I'm not going to be in a hurry to take another trade in the 38.2. Okay, I'm going to wait for another key Fibonacci level, which is the 61.8. This has also helped me a lot in my trading, and as you can see, price have hit the 68.2, gone up, consolidate a little bit, and then create another consolidation here. That way I could hop onto another position and allow my position to still run. When price did upside, this was a supply I should be looking out for. Okay, I should be looking out for this kind of supply, and as long as price doesn't hit the supply and react around the supply, I'm going to be expecting that whatever happens here is a retracement that could take price into breaking that supply. Okay, so we've looked at higher time frame supplies and also on different occasions in this video. So we have supply 1, we have supply 2, and I've made certain examples as to that. Now another example here is that we can look at higher time frame premises. Okay, so we can look at higher time frame premise for this one. So let's go on the daily time frame for this example here. I'm going to take out my Fibonacci 2 nicely, and we see that on the daily time frame we have support here. Okay, on the daily time frame we have support here. I'm going to take out this support and then make it available only on the daily, 4 hourly, and the weekly. Okay, now this support wasn't hit. Okay, but if you look at on a weekly scale, we can draw a weekly support. Okay, we can draw a weekly support, and this is going to be my weekly support here. Okay, a weekly support, and let me zoom in a little bit so you can see this is my weekly support. And if we go back on the daily scale, we see that price sits nicely on the weekly support area before reversing. That complete reversal happened around the daily supply or the daily support, and at that point a trader can expect that after this breakout here, that the next retracement, after this impulsive move, that the next retracement could be around that support, and you can see nicely it reacted around that support and then price continued upside. That is a good way to trade your breakout. Okay, you want to be looking at different time frame premise for your decision making. It's also going to improve your decision making as well. Look at how price reacted around that support area, and voila, off we go. For that, you have a very good risk to reward here, because your risk to reward is going to make the most sense, and we have a very small risk here. Let's say we have about 52 pips here, and we have a very huge reward here. For those of you that are looking out to target key environments here and also extremes here, you can look at TP1 around the wave B area here. Oftentimes I recommend that. You can look at the TP2 around the extreme here. So this is a very good position to be, and if you're taking a trade, you can expect to trade. Let's say you put it up a pending buy order and buy limit, so you're looking at your TP1 somewhere around the 4489. Sorry, I'm using my MT4 to do the example. I would have loved to. Okay, so this is not going to trigger. I'm going to use buy stop instead because of where current market price is. Okay, so this is a good profitable position, and we're going to be looking at, let's assume that we're looking at a risk around just maybe the last support or the daily support here around the 4278 area there. For the last support, 4278. Now let's look at what our risk to reward would look like, and it would make the most sense. And we're looking at risking about $31 for this kind of trade, and we're looking at targeting another position area here, which is around, we're going to be looking at profit of $69. So this is about 1:2 at the very least, and we could look to target the next TP area, which could earn us about $98. 1:3 risk to reward trade. All right, with that, I'm going to be back with more examples. See you next time. Stay tuned to the channel, subscribe, like this video, and share in the comment section what next you want to be seeing in my next video. I love you guys. See you next time.